Insurance agents from around the world, welcome to the Insurance Guys podcast, hosted by yours truly, Scott Howell, and the incomparable Bradley Flowers. For agents, by agents, we're here to share real-life experiences, tips, and insights related to all aspects of both being an insurance agent and running a successful agency. So sit back, turn up the volume, and let's get down to business. Insurance agents from around the world. My name is Scott Howell, your fearless host, agency owner, and insurance evangelist for I Protect Insurance here in North Alabama. And I am joined today by first-team All-American, great insurance agent, and I am lucky and blessed to have him as a friend. Ladies and gentlemen, please welcome thought leader, the incomparable Bradley Flowers. How you doing, Bradley?
You touched my heart with that, Scott.
Woo! Before we get started, guys, girls, insurance agents, we are going to be talking about how to build referral partners. Guys, I don't know that there's anything more important in the insurance business. I really don't. If you think you're going to be the old State Farm agent, former high school football coach that's going to sit there and aggressively wait for the phone to ring, Bradley, would you agree those days are just about over?
Those days are completely over.
Sha-na-na-na, hey, 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 goodbye. Yeah, I'm afraid so. I tell you one thing that it doesn't bother me as much as it used to, but I still get it pretty frequently. We have people come in our office and they'll be like, "Where's Scott? Why is Scott not here?" When that happens, if I happen to be there, I always say, "Guys, I'm sorry that I can't sit here and just wait for the phone to ring all day and work on billing accounts and how to change out a vehicle. But if I'm doing that, then we're not growing. Our business is not growing."
I get the same thing, Scott.
Before we get started on referral partners, guys, today we're going to be talking about how to build referral partners in your business and your insurance business specifically. But really, I've listened to a few of the podcasts we've done. Guys, you don't have to be in the insurance business to listen to this. This podcast really kind of applies to a lot of different businesses out there. I hope that we do pick up some business owners, entrepreneurs that maybe aren't necessarily in the insurance business, because I think if you just change the word from insurance to XYZ, you kind of get the same thing. What about it, Bradley? What do you think?
I agree 100%.
Yeah. Today, before we get started, because this is something I'm dealing with right now, we've had some rate increases in the state of Alabama. Really, you and I have talked about this. Everybody in the United States of America, every company is taking rate, especially in auto insurance right now because of distracted driving and just a lot of different factors. How do you deal with, what is your process, Bradley, to deal with when you get a customer, member, client, whatever you want to call them, they call the office and they give you the warning shot that, hey, if you don't get my insurance premium down, I'm leaving. What is your process to deal with that? How do you deal with that?
Well, like you said, every company in the state of Alabama or in the United States is taking a rate increase on car insurance. So now is the perfect time than any to deal with this, because I'm dealing with this literally daily. And I tell this to my team members as well, is the very first words out of my mouth or out of anybody's mouth needs to be, well, everybody had a rate increase. That way, that sort of tones down the urge to shop. And they're like, well, crap, I'm not going to waste my time shopping if I'm going to be getting high rates everywhere. That needs to be the first thing out of your mouth. And a lot of times, I had a lady in my office back in late May, I think the last day of May. She was as hostile as anybody has ever been in my office. And I actually proposed to my fiance a couple of days later, and I just bought the ring right before this lady walked in my office, and I was telling her, oh, I'm about to propose, like trying to make her like, hey, back off of me a little bit, don't be so harsh. And buddy, she was hostile, and it was because of her car insurance rate went up. And a lot of times what people will find in those situations is it's not that much. The ones who are the most hostile, it's not that much. The big thing is a lot of times those customers just want to be handled, Scott. I'll sit down with them and say, look, let's take a look at the policy. And Scott, with car insurance, I mean, a lot of people think we can press the magic button that says a rate increase or rate decrease, when that's one of those things. It just is what it is. A lot of times on the home side and the commercial side, I know there's certain things that we can adjust to maybe get the rate down. But with car insurance, typically, there's no way to get that rate down without cutting coverages. But one of those ways to maybe massage that rate a little bit is the first thing we'll look at is their mileage. Are they retired? And they still on a commuter class, that sort of thing.
Right.
And I roll through this with them. I'm not telling them what I'm doing. I'm telling them, okay, we're going to look at your mileage. All right, now we're going to look at your coverage. Now we're going to look at certain discounts and that sort of thing. And typically with us, we don't miss discounts. I don't know that I've ever had a client that we missed a discount on in 5 years. But I know that's the case with some companies. They do that, and they want to do their checks. So a lot of times after I roll through this, the client will say, all right, well, we'll just leave it like it is.
Right.
They don't want to make any of those changes. And sometimes you can rob Peter to pay Paul. You can raise your deductible for 6 months and then hopefully the rate goes down and then you lower it back down. But a lot of times even they don't want to do that. I had a lady in my office the other day. It was like, I cannot pay this. There's no way I can pay this. I don't have enough money in my checking account, blah, blah, blah. And I went through this process, and at the end of the thing, she's writing me a check for the original amount. She's like, I don't want to mess with anything. So, and that's what I tell my CSRs is a lot of times those people, they just want to be handled. They just want you to hear them out, let them vent, and they want to know that you care. And by looking at this, it shows them that you care. They don't want to think that you are blindly taking their money and not doing anything about it and not looking at their policy. So a lot of times they just want to be handled. And so that's how we handle it. Obviously, it doesn't work in every situation, and you have those people that are going to shop regardless. If somebody's willing to leave me over a few dollars, I don't want them anyway.
Right. Yeah. We're kind of dealing with that at my office right now as well. We took rate in the state of Alabama with nationwide insurance. Really majority of that was on auto rate increase, but June 24th. So people are starting to get renewals each month and they're seeing their bill go up and we're starting to get some of those calls. And, I have what I call the Scott Howell 3-day reaction formula, which means, first of all, blessed and happy and glad that most of my members or clients are going to give me a 3-day notice before they leave me. In other words, they call me and they say, hey, Scott, insurance went up. If you can't do something about it, I'm going to have to go. And to me, that is, I hate that happens from time to time, but I'm also thankful that at least they didn't just send a fax canceling their insurance. Do you know what I mean?
Oh, absolutely. So they at least give you a shot. That's the one. Yeah. To me, those are the ones that hurt the most. Right. Are the ones that you just get a cancellation letter or that, the damage is already done. Right. It shows no loyalty at all, which means that we didn't do our job. And that's what I tell people, if you're unhappy about anything, whether it be the rate or whatever, come to me first.
Right.
And hopefully if there's an issue, I've caught it beforehand, but let's at least talk about it. Because once they paid that money at that other company, you're pretty much SOL with getting them back at least until 6 months later.
Exactly. And so what I tell my people, and I just got through having this conversation literally 5 minutes before we got on the podcast, we've got 3 days. You're on the clock. It's a little bit like almost like a game show where you're on the clock for 3 days. You tell them we're going to get them something back in 3 days. If they fall through the cracks and you don't get back with them in a timely fashion, and I tell you, when we usually miss the mark on that is when we do a bunch of work and then we figure out we can't really do anything about it. And then you don't get back in touch with them in a timely manner, then they're gone.
Right.
And we had that happen this morning with a client that's been with me and he's a shopper. He's one of those that, we have quite a few in our office that do the whole, regardless of what their rate is, when it comes time for their premium to renew, they're going to call and tell you that you need to get it down. And those are the ones that usually you just know at some point they're going to leave. I mean, you can only do so much, and then finally you just have to throw your hands up and say, hey, we've done everything we can. But he was kind of one of those guys, but it still hurts to see him leave. I had an old vice president of a insurance company, tell me one time, he'd only been there for about 40 years, but he said, when you lose one policy, you got to sell two to make up for it. And I never forgot him saying that. So I told the girls this morning, I said, well, we just lost 3 policies. That means we got to sell 6 to make up for it. So that's something that I always have thought about when we do lose somebody. It's so much harder to go out and get new business and write new business than it is to just keep what you got.
Right.
I mean, it really is. It's a tough thing and it's hard to swallow, but I think one of the things I talked about on the previous podcast is when you do lose somebody, don't be a complete asshole about it. Just love them up, tell them how much you appreciate them having their business with you as long as you did, and tell them you're there if they ever, if you can ever help them again. Don't do the whole bitchy, snippy, snappy, can't believe you're leaving, making people feel bad, because I think you're the one that said that's the best way not to ever see them again.
Right. I had a client that I'm actually writing this morning, or I say this morning, it's still morning time to me. I've been up since about 5 a.m. My morning doesn't end till 3, which is when I usually eat lunch. But I had a client this morning that I'm writing. As soon as I get done here, I asked her which office she was at, and she told me, and she said, "Well, how difficult is the leaving process going to be?" And this particular person has a reputation for not making it easy. And I told her, I said, "Look, when you cancel your business with them, you are never going to want to do business with them again." And so it only hurts you. It doesn't hurt anybody else if you make that process difficult.
Right.
Because I get more return business than anything else. So I get more people. My biggest percentage of clients that come to me from different areas, I get more people that are coming back to me than brand new clients. And it's because we make that leaving process easier, and we're going to follow up with them every 6 months. So I think you need to make that. I mean, I think you have to have a right blend. I mean, I have an insurance commercial in my head, and I don't mind telling this to the masses because I don't have time to do it. But I have a commercial in my head where a guy's on the phone talking to somebody, and it sounds like he's breaking up with his girlfriend, and he's actually canceling his insurance. I think that would be funny. And you need to make it that way. You don't need to make it easy in terms of emotional. I mean, you need to be like, "Oh man," but make it seamless. Let there be no friction. Once it's done, it's done. There's nothing you can do. And I mean, and I've been guilty of showing my butt before. And those are the ones that just completely shock you. The cancellations that surprise you are the ones that you end up doing something you shouldn't do. But yeah, I think you need to make that process seamless because they're going to need insurance in the future. And if there's any problems with XYZ company down the street in 6 months, if you call them and they didn't have that same problem with you, guess where they're going?
Right.
And that's one of the valuable things, I think, Scott, of selling needs-based life insurance. Not, hey, buy this $10 a month policy because your autos will go down. I'm talking about true needs-based life insurance if you're a PNC agent, because typically they don't cancel that life insurance.
Exactly.
And the first place they call when that other policy goes up or they have a problem with that other agent is going to be where they have their life insurance at, because everybody knows how beneficial it is to have everything in one place. Right. And if you've had a life insurance conversation with someone that you have the PNC for, you're going to reiterate that to them typically.
That's a great point. And, one of the things that you realize when you get in the life insurance business, people buy a policy and then 10, 15, 20 years goes by and they don't understand a lot of times that you can't just call around and expect to get that same rate that you've got right now with Alpha 10 or 15, 20 years after you've had the policy. And a lot of times it takes them calling around and thinking that they're going to find something cheaper. And then they realize that, hey, I'm not 28 years old anymore. I'm 48. And that same policy that I have that I'm paying $35 a month for anywhere in the U.S., I'm going to be paying $150 a month for.
Well, here's the thing,
because
Scott,
I'm 20 years older.
Here's the thing, too, a lot of people don't think about is that most consumers don't realize that they have an insurance score.
Right.
They know about the credit score. They don't know about the insurance score. Well, if you swap insurance every year or every 6 months, your insurance score is progressively, no pun intended, progressively going up.
Right.
But a lot of people don't realize. Did you know that, Scott?
I did. I knew that.
And the reason I say that is I just recently found that out.
Yeah, I knew that they had an insurance score, and I knew that, and of course we all have to explain this to people as well.
I didn't just find the insurance score out. I just found out that if they swap a lot, it goes up.
Right. And we don't like to talk about credit in our office because it is such a sore spot. But a lot of people think that when they go to get their insurance quoted, that it's like going to a bank and their credit score is going to be really impacted by it. And so we have to talk a lot about that's what we call a soft hit on credit, where they're really the company no matter who you represent, the company's really just going in and taking a snapshot of that credit score rather than,
and it's not
the full,
just credit. I mean, that's a big misconception. People think it's just credit. It's also likelihood to file a claim. It's how many claims have you filed in the past? How many different insurance companies have you been in the past? So some of these guys, there's some of these attorneys do commercials that say you should shop your insurance every year and a half. And well, all that is helping that client or hurting that client, because if you swap, and this is one thing you need to tell your clients, the more you swap, your insurance rates are going to progressively go up because your insurance score is going to go up.
Right.
If you don't have something else to offset it. So what happens is you end up paying more in the long run than if you'd have just stayed with that original company that was $6.52 more.
I'll try to find this. I saw a diagram one time. It's been a few years ago, but it was a diagram. You may have seen this, Bradley, where somebody had gone in and done kind of a life cycle cost of insurance through different carriers. And what they found was, between the people who swapped every year and the people who stayed with one company over their lifetime, the difference in cost was about 3%.
That is really cool. I wish we could find that.
Yeah, I saw that somewhere, and I can't remember where. It's probably in one of those monthly publications that, there's 2 or 3 companies that have. I'm trying Property and Casualty Magazine or something like that. But yeah, it was a diagram showing somebody had done a study of that. And
that doesn't need to be in Property and Casualty Magazine. That needs to be in freaking Forbes.
Yeah, exactly.
Because the clients aren't going to read Property and Casualty Magazine. I don't care how bad we want them to. That needs to be in Huffington Post. And I mean, it's a fine line. I mean, I've talked about the whole swapping the insurance thing several times over the past couple weeks to people, and a lot. And you may or may not know this. If you're listening, I do a lot of marketing and a lot of videos, and somebody asked me why I hadn't done one of those, because it's a fine line, because I don't want to encourage someone to not get a quote from me. If you're getting screwed somewhere, you need to get a quote. But the point is don't be a hopper.
Right.
Don't be the guy that goes to the insurance company, has an accident, we pay out $18,000, and then you leave at renewal.
Exactly. Well, and for all the agents that are listening to this right now, and this can apply to other businesses as well. The longer you're in this business, the quicker you can pick up on the shoppers. You can kind of tell who's going to be a shopper and who's not, and depending on your
not write those people.
Oh, absolutely.
You just have to know that you need to expect that, and,
sure.
And you're not going to maybe go to a whole lot of trouble if they're on the lapse list or something like that, because they're probably insured somewhere else.
Right.
And
eventually they're leaving.
Yeah, and one trend that I found, Scott, there's a lot of insurance companies. We don't do this. I don't know if Nationwide does this, but if somebody cancels, or let's say they don't cancel their insurance, let's say they just let it lapse with premium due, they'll actually, and I dealt with a situation like this morning. Somebody came to me and they had like $12 in earned premium, which is premium that there was coverage for, but there was no premium was paid. They actually are going to send him a collection letter. And there's some companies doing that, and I think this is wise, because the trend that I notice with these shoppers, and I'm not saying that's right or wrong. I don't necessarily agree with sending a client a collection letter over insurance, but I think the reason they're doing this is what people are doing is they won't call you at all when they swap their insurance to make it easy. They'll just not pay it, and they just let it lapse. And I've seen that a lot. People who's canceled their insurance, and I had no idea because I don't handle the lapse list. They just let it lapse. Now, just because they lapsed don't mean you need to assume they left, but I think that's a trend that I've noticed with a lot of the shoppers. What about you?
Yeah, I would agree with that. I tell you, we try our best in our office. There's 2 schools of thought on the whole late pay stuff. There's one school of thought that the company is texting or calling or sending a letter, so you don't have to. But in a world where we have such a hard time differentiating ourselves from everybody else out there, how do you separate yourself from a pack of zebras? Well, you have to be different. And one of the things we do in my office is we have a beginning of day list every morning, and that's our late pay call list. And about 70% of that list is the same people every month. But what happens is you fall into this trap of, once you start doing that, you can't really stop. You've either got to make the decision on the front end, am I going to differentiate myself by my agency also calling on these people to let them know that they're late. And let me say this. I want to say this to all the newer agents out there. Just in the past 12 months, we have moved from picking up the phone and calling people because people are we're in this text revolution right now that people would much prefer us to just shoot them a text, which I think we do some of that now. Rather than calling them, we shoot them a text and just say, hey, just a friendly reminder, your payment's due. But we do that in our agency in addition to nationwide sending out letters and calls and doing all the things that they do, emails or whatever, depending on how they signed up. So it's kind of like double hitting them with, hey, your stuff's due and it's about to cancel. So that's just a value add that we have for our clients. So something we do in our office.
Right, and I think texting is the way to go. The biggest issue, especially with the shopper type folks, and I hope I don't get in trouble for saying this, is swapping cell phone numbers. I attended a meeting with some other insurance professionals last week, and that was one of the things that was brought up is texting, but the issue is people swapping numbers. And I think that's why it's important to get them to opt in, because they're saying that I'm going to be responsible if something happens and I don't get the text. You know? And I'll give a, if you don't mind, Scott, a shameless, or not a shameless plug, but a plug to a company that does a really good job with texting for insurance agents. If you are an independent, I know it's a little harder if you're captive. You have to go through compliance and integration and all that kind of stuff. But a company called Touchpoints Professional. You ever heard of them?
I have not.
Touchpoints Professional. It's basically a texting CRM that a buddy of mine owns, or sort of a buddy of mine owns, acquaintance, and basically is designed for insurance agents. So it's a texting CRM that's designed for insurance agents. You have to do a lot of the stuff manually, I think. I don't know how much I don't use the product, but I do know that it's a really, really good product. So that's something to look at, and it's about $120 a month.
It's Touchpoints Professional, guys. If you want to take a look at that and see if it can help your business.
They didn't pay us for that. They didn't pay us for that.
Yeah, no, they didn't. But if you guys want to, get in touch with them and see how they could possibly help your business. Now that we're in the texting revolution, it's been proven that people would rather get a text message than a phone call.
Texting has a 99.9% open rate.
Bam.
Email has a 10. Now, email still works. I'm a huge believer in e-bill, but email still works. But texting has a, because nobody likes that stupid little annoying notification on their phone.
Right.
And I don't know what that 0.01% is. That just must be a psychopath. I don't know.
Well, I'll tell you another reason it has a 99% open rate is because 99% of the time when you get a text, it's from somebody you know or from an individual. It's not, you open your Gmail account and you got 450 spam emails from 35 different companies, and it's like, hell, I'm just going to hit delete on all this.
Yeah, and I think the important thing to remember with texting for marketing, and this is what I think a lot of people are doing wrong, and I know in some cases you can't help it because of compliance and that sort of thing, but it doesn't look like a normal text.
Right.
The number's 4 digits. It needs to be 9. Isn't that how many digits is in a phone number?
Yes.
10
yes.
digits in a phone number.
Yeah, 10.
It needs to be 10 digits. It needs to be a local number, and it doesn't need to have reply stop at the end of every text. So and I think that's one thing that Touchpoints does really well is that it comes from a local number, and the person can actually text it back.
Right.
And there's another person on that end. And I know that State Farm has a pretty good texting platform. I used to work for them that you can reply back, and it comes to the agent's computer. So I think that's something that's vital. I get reminders from several restaurants around here. And it's such and such is playing tonight, that sort of thing. But you can't reply. I can't say, you know what I mean. So
right, yeah, and if any of you agents are out there looking for something like that, Google's got some stuff you can do. You can do some texting via computer, get a Google number, and I think you can do some of that via Google, can't you, Bradley?
Absolutely. You can do that through Google Voice. The issue that
Google
some
Voice.
carriers have with it is it's a third-party website, but I mean, come on, nobody is more secure than Google.
Right.
Google's not going to get hacked. You can buy their domain for $12, like that guy did in North Dakota, some guy in North Dakota, Scott and I were talking about this last week, had a notification on GoDaddy for when Google.com comes available. And he just so happened to be sitting at his computer, and the Google guys were like 10 seconds too late renewing the domain, and he bought the domain for $12.
Tell him what he let him pay him for.
I think he didn't tell them anything. He was actually, I think, going to give it back to them, and just sort of did it as a joke, which I think they paid him like 12. It was either 12 or 18 grand for it, and he donated all the money to charity. And you and I both know he could have got, they would have had to change the name of their company. And I told Scott, and I said what I would do is I would say I don't want any money. I would want Bradley Flowers to come up first in every Google search about insurance that day. And what I would do is I would live stream my office that morning and see how long it would take for the phones to crash.
Absolutely.
And then I would post that video the next day, and that's where I would get my business from, not from the number one Google search result.
Right. Yeah, that's incredible. I think the guy kind of undersold himself there, but hey, kudos to him for, not doing what most people would do, which is hold out for $1 million and, whatever other ransom, they would. I
don't think they would have paid him $1 million. They would have just added another O to Google.
Yeah, exactly.
It'd have been Google.
So let's talk a little bit about referral partners today. What are your thoughts on referral partners, and then I'll give you mine.
So I have a different point of view with referral partners when it comes, especially to real estate agents. Mm-hmm. No offense to my real estate agent friends. I tend to sway towards the loan officers. Mm-hmm. And the reason that is the loan officers have access to the money. What do you think about that?
Mm-hmm. No, I think that's a great idea. When I think about referral partners, I think the best example I've ever heard given about it was a guy that is in leadership with BNI, Business Net. I think it's Business Networking Incorporated. His name's Jerry Williamson. Shout out to Jerry. When he's teaching the BNI classes, he does and I'm not even involved in BNI right now, but he teaches a BNI class. It's kind of a beginner class for people who join BNI. And one of the things, and it really caught my attention as it relates to referral partners, but he draws on the board what I call a wagon wheel. And again, this kind of goes back to our theme that we had from the very first episode about, what is your vehicle? What are you trying to sell? And he draws in the center of that wagon wheel whatever it is you're trying to go after. So if you're trying, life insurance or business insurance, and you can even drill that down and put, we're going after farms. We want to sell farms. And then around the wagon wheel, the spokes on the wagon wheel, he puts all the individuals and types of people that he needs to get to reach to get referral business for whatever it is he's selling. So I'll give you an example. So you draw the wagon wheel, you put insurance in the middle, and then around the wagon wheel you write down, real estate agents, retirees, first-time home buyers, builders, commercial real estate brokers, mortgage people, property investors, business owners. These are all people that can help you. And then that's how you start building your referral base. You take each one of the spokes on the wagon wheel and you start writing down people's names that you need to get in front of that can help you, not with one sale, not with one sale, but with multiple sales, or maybe can funnel business your way for years if you have that type of, a really good relationship with them. That's probably the best example I've ever seen of how to quit thinking so narrowly about, I need to go after first-time home buyers. Well, instead of going after that one first-time home buyer, like you said, go to that mortgage guy that's doing 20 closings a week or a month, 30 a month, and partner with him. And figure out how instead of getting one, you can get 100 or 2 or 3 or 400 a year.
Right. I think you can do that with your marketing too, Scott, that wagon wheel. a good buddy of mine, Marcus Netto, who owns a company called Bluefish, a marketing company. If you look, they film a show called Marketing Madness. If you look them up on Facebook, it's like it's on July 10th. They posted it. The title of the episode is Your Marketing Sucks. And basically they tell you how to do that wagon wheel as far as that goes. But no, I agree with you 100%. I disagree with a lot of the things that BNI does, but they have a lot of good ideas and good principles.
Sure.
But here's a little stat. I got some numbers I want to throw at you that I've been Googling over here. I talked to a lot of new agents. I'm pretty young. The industry tends to be trending younger, at least in our area. So I have a lot of younger, newer insurance agents who call me asking for advice, or just business people in general. And that's not to toot my own horn. It's just that's the truth. Every new insurance agent, the first thing they're going to do is they're going to look up the number one real estate agent in their area, or real estate agents in general, because they tend to be a little easier to get to than loan officers. Loan officers are kind of behind the scenes, whereas a real estate agent's going to put themselves out there and do a lot of personal branding and that sort of thing. And this happened to me. This is personal experience. So, I talk to these real estate agents that are supposed to be the best of the best and that sort of thing, and then they don't send you referrals. And you're like, either they already have a referral partner and you give up on it, or you're pissed off at them. And that happened to me. I had a few that I overly explained and proved the point that I was the guy for the job. And I would answer, I went to a seminar for Better Homes and Gardens real estate agents and talked to about 30 of them and said, look, guys, I'm going to promise you a quote in 5 minutes. And half the jaws dropped. I got no referrals. Not to say that wasn't worth my time, because it absolutely was, because I made some good connections. But here's why. When you try to partner up with a real estate agent, here's why you're not going to get any referrals regularly. The average home price in America, a home sale price in America, is $188,900. You agree with that?
Yes.
And I feel like that's pretty comparable to an average area. I mean, that's including New York City, and in California, it's $188,900. The average commission typically on a real estate deal is 6%. So 6% of 188.9. Now, obviously, there's some situations where it may be 5 or 8 or that sort of thing, but it's typically 6%. So 6% of $188,900 is $11,334. So that's the commission that's carved out of that sale price, right? Typically, the buyer agent is not the seller agent, so half goes to each. That cuts us down to $56.67.
Right.
So that's typically what that agent is going to make on that. But then you have broker fees. And I don't know what the average broker fee is. Some people say 20%, some people say 50%. Around here, I know some folks, and it's 50%. All right, so 50%, that's $2,833 per sale. The average real estate agent in the United States of America, the last time I checked, this was the only thing I didn't Google because I know it off the top of my head, typically it's about $30,000. Now, that's also including the people, I understand that's also including the people that don't sell any homes, because there's a lot of people that say, I'm going to get my real estate license, I'm going to be a real estate agent, and then they don't do shit.
Right.
But, so that's $2,833, they make $30,000, that's 10 houses a year. Typically, the only cases you're going to get a referral in a home buying situation is when somebody's current insurance is really, really high and they need to get it down for the debt to income, or it's somebody that doesn't have insurance. Now, out of 10 home sales, that might happen one time, you think, Scott?
Something like that.
You're not going to get all 10. So it's not that they're ignoring you, they're not sending them to, and that might be the case, they're not sending people your way, but it's not necessarily that, it's because they're not selling any homes.
Right.
You're not, you're 10 homes a year. So to build up a real estate agent funnel of real estate agent referral partners, and again, I'm not picking on the real estate agents. One of my best buddies is a real estate agent and a marketing genius, but it's 10 homes a year. They're just not selling any homes. So you have to build up a huge quiver of arrows that are real estate agents in order just to get a few sales off of it that is worth your time. That's why I always go the loan officer route, because one loan officer can do the same amount of referrals as 100 real estate agents, because they may be doing 10 homes a week or a day.
That's right.
And they're the guys that are in there with the financing and can say, hey, I already got you an insurance quote, even before you have a chance to call your current company or current agent.
Absolutely.
So I think I know that's a really simple example, but I think that's a mistake that a lot of people make, is I'm going to go market to such and such, insurance agent and real estate agent, and They don't get any. They waste a lot of time doing that. That's one thing that I tell them is, look, don't put all your eggs in one basket.
You know what I call that, Bradley?
What's that?
Fish where the fish are.
Exactly.
If you were fishing in a bass boat on the lake down here in Guntersville, do you want to go in a hole where there's 2 or 3 fish, or do you want to go in a hole where your fish finder's just blowing up with fish? Of course you want to go to that hole. So
right.
You know, why would you want to go to one real estate agent or 10 real estate agents that sell 4 or 5 houses when you can go to that mortgage person that's doing 30, 40, 50, 80 loans a month? And of course we're talking about home insurance right now, but a lot of times that's a good place to start, because if you get the home, you're probably going to get the autos, right?
Right, exactly.
In fact, I typically try to lead with a home on the personal line side. Of course, I don't do a ton of personal lines business.
The home moves
myself.
the needle. The home moves the needle.
That's right. The home moves the needle, but it brings in the auto, and it's harder to do that in reverse if you're trying to lead with an auto to bring the home in.
Right. And
in my opinion.
Yeah. I just want to say, too, I think a lot of I think networking groups are good.
I do, too.
Not bringing anybody by name. I think networking groups are good. I think they're awesome when you are trying to get started. However, I think in the long run, you're better off sending maybe one of your team members to networking groups, because you can waste a lot of time in networking groups.
Absolutely.
And by networking groups, I mean weekly. You know where I'm getting at.
Sure.
Because the issue that I have is a lot of these networking groups, they require you to give out so many referrals. And people will give you referrals that are not real referrals.
Right.
So I think that the better way is to just white knuckle it and do it the real way, build relationships, being that guy. I mean, Scott, this is what I did. So when I first got to Saraland, I went into the Saraland Chamber, which at that time was heavily dominated by one insurance person, and had everybody wrapped up. And so I go in there. And literally, and I've been in the chamber 5 years, and I've literally not solicited one person for insurance. And I've gotten a lot of business from the chamber. I just go there. I'm just there. I'm a figure that I'm at every single chamber meeting, and I don't solicit anybody. I'm just there. I'm making a name for myself. People are getting to know me personally. And then what happens is when their insurance goes up or they have an issue, they're going to call me first, which is the whole point of marketing, is you want to be the first person that pops in their head when they think of X. And so that's the way that I network. I go to a networking event, and I'm not the guy that's going to shove a business card in your face. If anything, it's off-putting. You know, it's lazy. I hate it when people come up to me and, here's my business card, and like, okay, well, can you romance a person first? To quote Gary V. And so that's something that I would suggest is you have to have patience. You have to have a lot of patience when it comes to building solid referral partners. I mean, you can go out there and shove your business card in people's face and go knock on 80 realtors' doors or loan officers' doors in a week. And you'll get some business off of it, but you're not going to build any long-term sustainability. You know, and what happens? What happens if all 80 of those send you a referral this week? You're not going to be able to handle them, and then you're going to discredit yourself. Exactly.
Well, and I'm going to go Gary V on you for just a second, guys. If you're not following Gary Vaynerchuk on YouTube, his Daily V, it's really good. If you're an entrepreneur, you really need to look that up. I mean, he's done something like 200 and something episodes of that. Last about anywhere from 10, 15, 20 minutes, I guess, to watch it. But
there are some that are an hour. But it's really that show, just to watch how he handles his day. That's what I look at. I look at how he interacts with people, and not necessarily what's going on, but just like how he handles himself is, to me, the best part about that.
Yeah, and to that point, guys, I'm going to give you guys, and I want you to write this down, okay? If you got a second, grab a pen and paper. You need to write this down. I know you need to go in a few minutes, and we're going to get off here in just a second, but we're talking today about how to build referral partners, and I'm going to give you guys some Scott Howell, Gary Vaynerchuk rules, and this kind of falls in line with exactly what Bradley's been talking about here the last few minutes. So rule number 1 is give value first. When you meet these people, give value first. Well, what does that mean? Well, once you get to know them, if there's something that they need or something they want, Give them that value first, and then don't expect anything back in return. I think a lot of people do things for other people with an immediate expectation that they're going to get something back from this. And so what I've tried to do, with what I do is when people come to me that need help, and if they're a referral partner of mine or a business partner of mine, I try to give value first, and then I do not expect anything in return. And that is really, really hard for people to do. Most people do something with the intent of, in the back of their mind, thinking, well, I'm going to get something out of this.
Which is the problem with a lot of networking groups.
Absolutely.
A buddy of mine told me one time it's like walking into a tank of sharks with business cards.
Right, exactly.
You need to be selfless. You
right.
51-49. I'm going to give 51 and expect 49. And I know I stole your point, but
that's exactly where I was going. I've got the T-shirt from Gary Vaynerchuk, 51-49, and people ask me all the time, what does that mean? Well, it means whether it's in your personal life or in business, if we had a jury of 500 people that were standing there and they understood the story of what you've given to that other person versus what they've given back to you, you always want to know that those 500 people would say that you've given 51% in that relationship to the other person's 49. Don't be a taker, be a giver. And that's really what the 51-49 is on the T-shirt. And I guess last but not least is this will just happen naturally if you're doing all the things that we just talked about, but just building personal relationships with mortgage brokers, with, real estate agents, with property managers, or whoever it is that you're trying to get to build relationships for whatever that vehicle is that you're trying to sell. Figure out who you need to be in front of and start building those relationships and giving value and not having any expectation of what's going to come back your way. And usually, not all the time, but usually, you will find yourself getting a call on a random Thursday at 4 o'clock that, hey, Scott, I got somebody I think needs to do some business with you.
Right.
Would you agree?
Right, absolutely. Absolutely. I mean, Scott, I've got relationships I've built with quote-unquote referral partners that I probably should dump and never talk to again. But I'm going to worry about helping you out and giving to you, and how can I help you? I'm going to plug your business on Facebook and Instagram and Snapchat and Twitter, and you're never going to do anything for me, but eventually one day it's going to work out. So
Absolutely.
All right, buddy, wrapping up, any other points?
No, man. Guys, this is Scott Howell and Bradley Flowers, the Insurance Guys, for agents, by agents. Remember what I always say, rewards come from action, not discussion. Get out there today. Stop talking about it and start being about it, and get out there in the big bad world we live in and go sell something to help you and your family. Go help the insurance agency or the company that you represent, and go write good business for the companies that you write insurance through. Bradley Flowers, I hope you have a great rest of the week, brother. I love you.
All right, buddy. Thank you. Have a good one.
All right, man. See you guys. Have a great week, folks, and we'll see you next week. Take care. Thanks for listening to the Insurance Guys podcast. If you need to know more about me or you need to get in touch with Scott, you can always reach me at theinsuranceguyonline.com or email me at iprotectins@gmail.com. And if you need to get in touch with Mr. Bradley Flowers, go to bradleyflowersinsurance.com or email him at bradley@saralandinsurance.com. Guys, we love you. Thank you so much for listening. We look forward to being with you again real soon on the next episode of The Insurance Guys. Take care.